Welcome everyone to Real Estate with Gwen Price. This is our monthly market update. And with me is Trina Tallon, a mortgage agent with Neighbourhood Dominion Lending Centres. Hi, Trina.
Hi, Gwen. How's it going today?
Pretty good. Unfortunately, Lana, Watier, my broker, couldn't make it this morning, but we'll plug through and see what we can talk about and just see what's happened in the last month. When I pulled out the stats, there isn't a huge amount of change from last month. Like, we're still down in listings about 10%. Earlier, you know, it was about 25% for a while, but we're still down about 10% from last year. Sales are up slightly, about 3% from last year. And the average sale price is still up about 11% from last year. So right now, in the city of Greater Sudbury, we're running around $331 is the average sale price for residential. So that's not counting multifamily or vacant land or anything. It's just houses within and in for the whole of the Sudbury Real Estate Board, the average sale price is about $316-ish. So that encompasses, you know, the outlying areas, but in the city it's about $331. Excuse me. So that seems to be, you know, staying around that 330-ish, and anything either side of that, of course, is still pretty busy in terms of offers and that. So, you know, from the 250 to the 400 range, things are still selling, and there's a shortage of listings in some areas.
For sure. And are you finding that there's still quite a few multiple offer situations coming in?
Yeah, there seems to be. Excuse me. It just depends, I think, on the product. Like, for some things, they're not getting that. But yeah, my last few offers in the past month have been multiple offers, and some were like 10 and 12 offers on a property, and it went well over list price. You know, the 3 listings that I had this past month. So yeah, and some of it's just, you wonder, like, how high will they go sometimes? And it's, you know, it's up to the buyer. They have to feel comfortable doing that. And of course, they have to be qualified from your perspective, right? That they can go over list price and still manage to buy the house.
Absolutely. And that's an important point, because I often have people asking if they can go in without a financing condition. And my response is always, sure, but you know, you need to be prepared that if something comes up where an appraisal is required, even when you're putting less than 20% down, those mortgage insurers, CMHC, etc., can ask for an appraisal on their own in the back end. And if it comes in less and you've gone in with a cash offer, you just need to be prepared to pay the difference if it does come up short. Okay. And if the seller doesn't want to, you know, bring the price down, kind of thing.
Yeah, so there is that, you know, it can get a little crazy. Like, have you found that there's anything, because I've heard, you know, some deals have fallen apart because of financing. Is that because those people weren't qualified, or is it changes in the banking or the mortgage insurers? What's going on there?
Well, we're living, as you know, we talk about monthly, we're living in a time that's pretty much unprecedented for our, you know, recent generations, kind of thing. And things that were getting approved last year are not necessarily getting approved this year. You have to keep in mind that the mortgage insurers, even if you put 20 or 25 or 30% down, most of the time there's still mortgage insurance happening in the background. The banks are just paying for it, but they are ultimately responsible if you default on payment and not the bank. So there have been situations out there that, through talking to my peers, where pre-approvals have been given, but their credit's a little bit sketchy, not like it's borderline, but they only have 5 or 10% down. So they write an offer and it gets sent in and the lender approves it, but when it gets to the mortgage insurer is not happy with what they're seeing for credit. They either come back and they say they want a cosigner, or flat out no, because of credit issues. So they're tightening their belts, and it's for everyone's benefit, actually, because if someone that does go into default, what happens is that mortgage insurer has to pay the bank out the mortgage, and then they had take on the property and they sell the property, right? So
Which, yeah, maybe that's something you can touch on a bit. A lot of people, a lot of the public believes, you know, when they see a bank repo, that that's a deal, you know, and it ought to, there's usually a reason why somebody's lost their house. Of course, maybe their financial situation changed, but it's I don't know how many times I can tell you, I go into a bank repo and they've done a bunch of renovations, over the top renovations in one part of the house, but they haven't addressed some of the major issues because they can't afford to. So bank repos are not necessarily a deal. And sometimes people think they can really lowball an offer and give it to the bank, but the bank has they have to try to recover as much as they possibly can on a mortgage.
well, it's that, and also they have to sell at fair market value, because even if a person defaults, then like the mortgage of course has to be paid, but the person could possibly also get some of their equity back.
Right.
Right?
Yeah.
So
yeah.
quite often when you're looking at a bank repo, a lot of the ones that I've seen, it's like you said, it's either partway through a renovation and it's not done, or the place has been completely destroyed.
Yeah.
And then if you're handy, that's awesome, because you can go in and, but when a home is completely destroyed, you're not getting it for less than 20% down.
Yeah. Well, exactly. And is it, how does it, so the bank, if the bank's holding the mortgage and it's not insured, that's one thing. But then if it's an insured mortgage, the bank tries to sell it for like 90 days. And if it isn't sold, does one of the insurers take over, or what's the procedure there?
I think it depends, and it's situational. But
Okay.
most of the time, you're either going to see, if the bank is doing it, it's because the bank doesn't have it insured. So the 90-day thing has to do with foreclosing on the clients and kicking them out
Okay.
type of thing, versus, so they try and get it sold before they actually have to do a repossession of the
Yeah.
property.
And it's not that we see a whole bunch of bank repos right now, because if somebody's, because we're in a different market, right? Right now, it's mostly in favor of the sellers. So if somebody's in trouble financially and they look like they're going to not be able to keep things going, they should be trying to sell now and get out as quickly and as cleanly as possible, rather than risking a bank repo, because your credit, well, I mean, you probably, excuse me, you have credit issues coming up anyway, but it's much worse to lose your house.
Well, that's true. And I'm finding the last few months, the number of refinances that I'm doing is quite a bit higher than it has been in the past, for two reasons. One is the fact that housing prices in Sudbury have jumped so much in 2020 that people are taking advantage of the fact that their houses were so much more, instead of the usual, what is it, 3%, 2.5%, 3%
Yeah.
increase. A lot of them have gone up like exponentially.
Well,
So
especially if they've owned it for a while too, in the last, 10 years or something, they've got a lot of equity there.
yeah. Exactly. And a lot of folks are, I think that COVID's made a lot of people realize that they don't necessarily need everything that they have acquired, or
Yeah.
that they want to be, have less debt and things like that. So the primary reason that I've had for refinances is that people want to pay off their unsecured lines of credit. They want to pay off their snowmobile loans. They want to pay off any other kind of loans that they have. A lot of folks out there have huge credit card debt that they're paying 20 or 30,000 or 20%, 25% interest on.
Yeah.
And the refinance rates right now are so incredibly low that it's worth it for folks to pay for that appraisal if they have to, and to pay the $1,000 in a legal fee to get rid of all that debt. I had a client last week a couple of months ago, and she was in my office last week. I got her closed about a month ago, where she had about $40,000 in credit card debt. She was talking to me in the summertime and saying she was stressed out about it.
Yeah.
And it was from doing renovations in her house. And I said, well, why don't we refinance?
Yeah.
And
Yeah.
she stopped by and saw me last week and said, I'm sleeping at night now
Yeah.
because I have one bill to pay instead of worrying about how I'm going to pay down all of this credit card debt.
Yeah. No, it makes sense with the rates that they are. And like rates right now for mortgages, like a 5-year, what are they hovering around?
Well, a 5-year fixed for less than 20% down is around 1.69 to 1.84.
Wow. Yeah.
And the reason why I give a range like that is,
Yeah.
as a broker, um, rate is very dependent on how your file looks.
Yeah.
So when I have clients that are newly separated, don't have a separation agreement, and but everything is very clear cut, and just an affidavit can be done that there's no support or what the support is and what's going on with the matrimonial home, they're going to pay like a 5 or 0.05 or 0.1 more than someone who's like AAA, everything's clean. But it's better than waiting years to get your separation agreement done.
Yeah.
And then you get out, you get into your house, all that kind of stuff. So there's always a range when it comes to that,
Yeah.
when it comes to rates, especially since 2018. It's really changed.
Yeah. I mean, and that's phenomenal, right? Because we all could talk about the past with double digit, which is pretty crazy. So, and I mean, there's no sign of that going to change. I can't imagine that the rates are going to jump up anytime soon, because that would stall our real estate is such a huge part of the economy, right? So I mean, it even though it's tough on the buyers right now to find a house, the rates are good, and it is a good time to buy a house. You got to kind of be take the blows, because sometimes when you're constantly in multiple offer situations, you think, oh my God, I hate this. And as a realtor, I hate it too. I hate this on my buyers, but there's still opportunities out there. It's just
Absolutely. And CMHC did a study recently, and they went out to people who bought homes this year in the environment with the competitive offers and higher purchase prices and things like that. And 95% of the purchasers were still very happy that they made the decision to purchase real estate instead of investing in stocks or things like that. In particular, the first-time home buyers, right? They feel that this is because it's really your biggest tax-free investment that you can
absolutely.
have. So
It's like I always think of like a forced savings every month. You're putting something, and in Sudbury, our prices have been stable for quite a while and have gone up in the last few years. So the risk factor for owning a house here, Sudbury's a different economy now. We're not so dependent on one industry, where that could be in another center, right? So Sudbury's a good place to invest. So I do find, we're getting out of town investors looking at Sudbury too, because our prices relative to some other locations are still affordable. And I know for some people it's not, but when you look at our average sale price of $331, as opposed to 500, 600, $1 million as an average sale price, no wonder they're looking at us, as a place to invest, because it's stable, and prices are relatively cheap for them, coming from other centers. But yeah.
absolutely.
Yeah.
And as far as rates holding, I participated in a talk from Dr. Sherry Cooper yesterday, who's Dominion Lending Centres chief economist. And so I quite often gloss over after listening to her for about 10 minutes, but she's very good at what she does, and
Yeah.
how the Bank of Canada is behaving and what they're investing in bonds and not investing in things like that. It looks like rates are going to hold for a couple of years, but whether we're at 1.69 or 2.5 or 2.7, versus where we were years ago with
Yeah.
like 8, 9, 10,
Yeah.
15% interest rates.
Yeah.
We're doing really well.
Yeah, no, I agree. And you're right. Like, you know, all the stats, all the numbers. Yeah, you kind of, oh my God. But really, people, home ownership, I love it when I see somebody in their 20s buying their first house. And now I have some clients, they're still in their 20s and they're buying their second house. And I think that's great, right? Because they've got a future there that, you know, they've got some tangible assets. And I think that's partly too with COVID. There definitely is a COVID influence on purchases. And I think people want to have some kind of tangible, this is my home, this is where I can come every day and feel kind of protected from the elements. And there's a lot of things that are hard to quantify, right? How a buyer feels about something, you can't put that on a spreadsheet, right? So
Exactly.
that's partly what I like about residential real estate, because you can't, there is sometimes no logic to things, but oftentimes there's reasons why people do what they do. And sometimes it's hard to see their reasoning, but people want to have some kind of security. And I think COVID really brought that to the forefront.
Absolutely.
You know,
I
yeah.
agree.
Yeah, so it'll be interesting because I don't see any real drastic changes. People keep asking me what's going to happen. Well, I wish I had a crystal ball and I don't, but you know, it looks like things are just going to keep going the way they have been. People are not going on vacation, so they're here. They can, you know, go out and look at houses at the drop of a hat kind of thing. Was, you know, we used to have kind of our typical cycle when the kids were back in school, when the kids are on vacation and all of that, but people are going to still be here. They're not going to be going out of town on vacation. So it'll be interesting to see as we progress through, you know, our market, because typically by, excuse me, by December 1st, things quiet down because people would focus so much on Christmas. But Christmas is going to be different this year for a lot of people.
Oh, for sure. I have been amazed by how much Christmas decorations and candy and things like that are already out in the
Yeah.
stores. And my family in Ottawa was telling me a couple of days ago that the Christmas decorations all went out to their stores and that they've gone back to the stores a couple weeks later and they're almost all gone. So folks are definitely getting into the Christmas spirit early.
Well, and I think we kind of saw that at Halloween, even though Halloween was different for a lot of families. There seemed to be so much interest in decorating and trying to make it as fun as possible for the kids. And I think, yeah, probably that's the same thing for Christmas. We can't go away. We can't take the family on vacation to, you know, so we're going to stay here and make a blast out of it, I guess. And that's, you know, I mean, the kids have been through a lot this year, that's for sure. Everybody has. And to give some kind of normalcy to the, you know, the holidays would be great.
Yeah, absolutely. So I just wanted to give one tip before we go, Gwen,
Yeah.
and it has to do with credit, because I've been seeing this happen more and more lately.
Okay.
Folks thinking that they have lovely credit, and I pull their credit bureaus, and I don't know if because COVID's caused, I know that there's a lot of fraud. There's a lot of scams happening right now.
For
But I
sure.
recently had a client who has AAA credit. I pulled her credit bureau in the summertime to give her pre-approval. And then I just pulled it again last week, and she has a collection showing up for an account that she never had.
Oh, wow.
So now she's in a battle with the credit bureaus to get this removed. So she's having to prove it's not her that had this collection, all these kinds of things. So my suggestion to anyone who's thinking of going out and purchasing a home, you know, other than the things like get pre-approved and make sure your down payment's in a bank account, not under the bed and things like that.
Yeah.
Go to equifax.ca or transunion.ca,
Yeah.
and they will provide you with a free copy of your credit report.
Absolutely.
It takes about 10 days to get in the mail, but they will send it out to you for free, and just have a look at it and see whether or not you see anything that doesn't look right on it.
Yeah, good
Because
idea.
that can full stop what's
Yeah.
happening in as far as buying a house.
Yeah, and you're right. There is so much going on out there that you're constantly bombarded by all of these phone calls, and it is, you wonder how are they able to do some of these things, but because of technology or whatever, they're capable of damaging somebody's credit. And it is a very good idea to check on it every now and then, because, and especially if you are going to be buying a house, because that's pretty well scary when you get to you and all of a sudden, well, what is this about, right? And you have no
Absolutely.
idea. Yeah, no, very good advice. And
Thanks.
thank you very much, Trina, again, and it's always a pleasure. And of course, I'll have our contact information if anybody's got any questions about mortgages and getting pre-approved. Certainly give you a call, and if they want to buy a house or sell a house, they can give me a call.
That's
Anyway,
right. You've got it.
yeah, so it's been a different kind of year, but we're getting through it, and Sudbury's going to be okay.
Absolutely. And enjoy the sunshine over the next few days. I think I might take my laptop and work from the deck this afternoon.
Oh, I know. Well, it's just another little window opening for us, where I've got a few things to do too. So great. Thanks so much again, Trina.
Thanks, Gwen. Have a great week.
You too. Bye-bye.